On this episode of the InsurTech Geek Podcast, we're talking about bridging supply chain gaps with cargo delay insurance with Yann Barbarroux from Otonomi. The InsurTech Geek Podcast is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. The sponsor of this InsurTech Geek Podcast episode is none other than JB Knowledge. JB Knowledge's insurance technology services provides technology solutions for the insurance industry, specializing in the property and casualty insurance sector. Learn more about JB Knowledge at jbknowledge.com. And we are back. Rob Galbraith, most interesting man in insurance. How you doing, buddy?
I'm doing well, James. Managed to avoid the recent Hurricane Beryl here in San Antonio. Didn't even get any rain that day. We went out and had a nice round of golf. Well, I should say nice. It was I got my money's worth. A lot of shots. Yeah, I got 100 on the golf course. Not in a good way.
And 100-degree temperatures too. Yeah. It's interesting. You know, College Station. We got a good bit of rain and probably about 50-mile-an-hour winds. I tell you what, though, Houston got smacked around a little bit. I just got back from New York. I was up there on when the hurricane hit, and I flew back to Houston, and I got out of the airport, and man, it was mass chaos. You know, all the power's out everywhere. There's generators running pretty much everything around the Houston airport, including the hotel there, the airport where my car was parked. And all the gas stations are shut down because they don't have power, and multi-hour lines to get gas. And I mean, it's banana land. It's crazy. It's a crazy deal. So I'm currently in Dallas at the Insurance Council of Texas PNC conference here, and so I'm enjoying being in a city completely unaffected by the hurricane, enjoying this, and I'm excited about our conversation. Yann, how's it going from New York City?
Yeah, thanks for having me again. You know, I was here, I think 3 years ago, as you mentioned. Glad to come back. It's been a lot happening, so glad we can get an update on our progress, and glad that you get running like a very terrific podcast episodes for the industry. I'm based in New York, back in New York the past 2 weeks, but I was on the road for 2 months. We can talk about it later. A lot of the cities in Asia and Latin America, and now back in the U.S.
Awesome. Yeah, for our listeners' reference, we interviewed Yann back on November 4th, 2021. That's episode number 67, and they'll be posted in the show notes. So we're not going to do a personal background with Yann because we already did it. You want to listen to that? You want to hear about the background story? Go to episode 67. In fact, this was at ITC Vegas 2021. So just a little side note, it was at InsurTech Connect, which I'm actually really excited to say I'll be speaking at. Rob, I don't think I told you yet, nice. But interestingly, InsurTech Connect, ITC, and National Comp are running in the same hotel at the same time.
Oh, wow. Okay.
So
that's convenient for you.
Two, and I'm speaking at both of them. So you have two major insurance conferences in the same hotel in Las Vegas at the same time, in the same convention center at different floors. So I will be walking back and forth between the two conferences, speaking and podcasting and doing some other fun things. So interesting. You know, as you know, we build work comp software. For the listeners who don't know, I have two companies, JB Knowledge that does, custom software development for insurance companies. We do, managed maintenance and that kind of stuff. And then Terra, which is a work comp claims and policy software. So National Comp's a big conference for us, but so is InsurTech Connect. So I'll be excited to be at both of those. So let's get back to Yann. Yann, it's been almost 3 years since we spoke to you. It's been two and some change, and we're glad to certainly have you back on and to talk about what's been going on with parametric cargo insurance. Just a quick one-sentence reminder about what the hell parametric cargo delay insurance is.
Yeah, so parametric, insurance is a little bit of like esoteric, scary word. But the long story short is it is not an indemnity-based insurance. Instead, parametric gives you ability to have predictability of the amount received, the claim limit, right? There's no adjudication involved. The second point is there's no claims process, and there's no proof of loss needed, right? Because if the event and the trigger happen, you get the full limit, and you get paid fast, right? Because it's automatic, it's data driven. So we pay out as quickly as 48 hours in certain cases. So that changes, dramatically from multi-months type of process you have to go through. Now, in our case, the parameter that we actually looking at is the transit time, right? So the cargo transportation transit time. If we observe a delay beyond a certain threshold, then we pay out. No questions asked, right? So that's the simplicity of our product.
So in essence, it's gambling, right? I'm betting on an event happening, and I'm getting paid out if it happens.
Not at all. It's not gambling.
Okay, well, let me,
on public yet, so I'm going to be in trouble.
Okay.
Exactly.
So do I have to actually have cargo insurance cargo shipping to buy the parametric insurance on it?
Yeah, that's correct. So it is not a speculative. It's not a speculative product, right?
Yeah.
It does have some component of trying to maybe predict certain events like the hurricane in Texas, which would be disrupting both maritime and air traffic. Yeah, like no doubt about it. But the central point of our product is the shipper or the freight forwarder involved into buying this delay insurance product from us has to have the insurable interest. If they don't have insurable interest, we don't offer the product. Right?
Yeah, and that's the thing. Of course, I was being facetious in my comment, because certainly that's what we'll see immediately when they hear about parametric insurance. Like, oh, it's gambling. I'm like, no. You have to have this magic phrase, insurable interest. You actually have to have a stake in it. Otherwise, it is gambling, and you actually have to pay income tax on it if you don't have an insurable interest. The loss. But there's a whole bunch of things that come into play. But because you have an insurable interest, you're receiving a payout on a loss event. It's just a lot quicker, a lot smoother adjudication process, because you have the ability on your own to independently verify that an event happened, and then make a payment based on that event being happened with the obvious connection that there's a loss on a connected insurable interest. And so I can't go buy your cargo loss insurance if I don't actually have cargo shipping, because I don't have an insurable interest. So I would have to go ship something and then buy your insurance on it. And so that's the big difference. And I just wanted to point that out for all our listeners. When you think about parametric insurance, the big difference between parametric insurance and just an online bookie that lets you bet on anything, because there are some blockchain websites right now, Yann, and I've been really like following this and I kind of dove down the crypto and blockchain rabbit hole on this that allow you to bet on any kind of event that's verifiable by third parties using Bitcoin, but because there's no insurable interest, it's just online. It's just straight up gambling, right? They have to run it offshore. So it's very, very different, very, very different premise. Similar technology, because you can verify that these events occur. So in the almost 3 years since we talked last, how has this business model evolved? How have things changed?
Yeah, so I kind of wanted to kind of recap why we're doing what we're doing, right? It's not so much that we facilitate a process and make it smoother, right? The foundational principle is actually we're bridging an exclusion, right? A protection gap in the industry, which is cargo delay as a peril is being excluded from marine and cargo insurance policies, right? And that's actually both a legacy reason and second, a technology reason, right? So the first reason is the first maritime marine insurance policy was written at the Lloyd's of London, which was a coffee shop in the 1600s. And they were protecting the Commonwealth export of spices, garment, and whatnot. And, on the back of their coffee shop, they're saying like, okay, if the vessel sinks, if you get some damage to your goods, we can write this piece of paper that here's your maritime insurance policy, right? So that's where the slip was born at Lloyd's, really. And since then, that's the irony of the thing is the language barely changed. So delay was excluded from the 1600 and is still excluded in your traditional policies. So we kind of bringing and grasping this exclusion and productizing it to make it now a value add to the customer and a new value, a new protection that they can purchase in the market. And for that matter, we first to market. We're the only one offering delay insurance in that format, right? The second reason was technology driven. Up until, I want to say, 7-10 years ago, the democratizing of access to reliable and secure API, cloud, sensors, GPS, satellite technology for maritime tracking, aircraft tracking was not, up to par. And the advent of those technologies are now enabling for real-time tracking and at affordable cost, right? And so the intersection of those two reasons is why the time is right? So why we're actually doing what we're doing right now. So, and then it's been actually very eye-opening the past couple of years, right? Being on the road, talking to shippers, cargo owners, freight forwarders, logistics, insurance brokers around the globe of, the amount of losses, the amount of unhedged and unmitigated exposures that they keep hearing from customers, right? So the main root cause of those losses, right, are essentially a number of things around global macros, for instance. So you can think about geopolitics being like one of the most disrupting effect, right? So U.S.-China trade, Ukraine, the Suez Canal, Panama Canal, soon to be Taiwan being, geopolitics problem. So everything is kind of creating a lot of those problems between countries. The second one is where you started the episode, right? Hurricane in Texas, one more time, right? We have like one of those climate disruption. And that's disrupting a lot of the global transportation by air, by maritime, over the roads, you name it. And there's a flurry of idiosyncratic risk that you can observe, collision between vessels, cyber risk, the Baltimore, event a few months ago. There's a long list of issues that keep, disrupting this market. And, while it's actually less and less easy to actually transport goods and commodities, the market is growing at a parabolic rate. Actually, there's an exponential growth of demand. Namely 45x growth the past few decades in global trade. Now nearly 25 trillion of commodities being moved every year. So it's a huge market, and the transportation.
That's a lot of insured. That's a lot of insured value. That's a lot of insured value, huh?
Yeah. So that's what we're facing right now.
Wow. Just a little minor detail. Because I'm a history nut. The first maritime insurance was actually 4,000 years ago. The Babylonians wrote bottomry contracts, and people propagate this Lloyd's of London being first, but it was actually the Genoans in 1347 that had maritime insurance contracts. Isn't that crazy? The Italians actually were first to the table. They had a little challenge because the church didn't let you charge interest at the time, so they had a little challenge with some of those contracts. But the word policy first showed up in the 1400s, if I remember correctly, about 200 years before Lloyd's opened its doors. So Lloyd's obviously is the origin of the modern marketplace, but I do want to give a little bit of credit to the Genoans, the Italians, and the Babylonians for originating the concept. Just like when you're talking about flight, because I'm a pilot, you got to give a little credit to the Brazilians because they did a whole lot of flying around the same time the Wright brothers did, and the Brazilians claimed they were first in flight. There's always a few edges to the story. So, look, shipping things around the planet, because obviously maritime insurance has been around for 4,000 years, has always been really important, and certainly it made or broke the backs of the economies of many countries in in Europe and the Middle East and North Africa for a really long time. So this has been a major issue for people for a very long time, is insuring this. Now we have the ability to track literally everything. I mean, I feel like there's very few things that we can't track now and identify in real time. Like one of my friends was the founder of marinetraffic.com, and really that was a really interesting business that he ended up selling. But I mean, they were able to detect when North Korean ships were offboarding their goods off the coast of Japan. I mean, they could tell they were stopping and docking next to another ship and offboarding. So you can tell all kinds of activity you can track. We can track all kinds of weather activity. Now you can just connect all of it. Where do you think all this is headed? I mean, is there really a deficiency in maritime insurance that warrants a whole lot of innovation? I always like to ask, like, where's the real problem now that's not being solved by the traditional maritime insurance industry?
Yeah, it's a very good point about the Janelle, and I'm going back to your first point. And surprisingly, a lot of the maritime insurance brokers are actually Italian. We're dealing with a few of them, and it is true that they were innovator in their own time. But to your point about maritime traffic, by the way, I'm still waiting for the intro. I would love to talk to them. Just kidding, but I think it could be interesting if we can partner with them. The current gap in the industry that we're facing is essentially what I was trying to explain. There's an exponential growth of demands, right? And you can think about Temu, Shein, those e-commerce products, which are both maritime and air, and the logistics being essentially operating as if it was 1994. Right, so there's a big gap. There's a few decades gap in terms of the demand and the supply, right? So the operations capability from the existing incumbents, right? And embracing the technology and adoption is what's being currently a challenge. It's being adopted, and that's transforming, but it doesn't take a few months, right? We talk about the next decade to bridge that gap, and that might be ambitious. And one of the resulting effects from this gap, I was throwing some numbers 5 minutes ago. Another one that's very interesting to actually focus on is nearly 90% of cargo to containers at sea and by air are actually uninsured or underinsured right now. Right, huge gap in terms of the even the coverage of the existing market, right? And when you're saying real-time tracking, IoT sensors, trying to get the real refined data and granularity of data, I think we have a full wealth of reliable data. It's not being utilized by insurance company right now, right? And I think we're one of the solutions that's trying to bridge the gap and connect the dots effectively. There's other players that are doing a great job as well, but we're going the route of full data enablement, quantitative algorithmic underwriting, and real-time tracking and triggering events, in a very rapid and fast and transparent way, right? So in our case, parametric delay is actually a very obvious product, right? This is a low-hanging fruit, quote unquote. We're already working on parametric damage type of product where we can leverage computer vision and other sensors in order to trigger payment based on perishable damages and destruction, or vaccines, life science. There's the flurry of other parametrics that can be developed in cargo and global transportation. So very excited about the next few years. Yeah.
Yeah, you should be. That's incredible. And, you're talking about, ease of underwriting, ease of claims handling, ease of payment. I mean, dramatically facilitating these transactions, and certainly ensuring the under or uninsured is a major social good, as well as, hell, I just drove through a hurricane riddled area with a large number of people who are under or uninsured. And it was a good reminder of how devastating it is when people can't or don't get insurance. It's a major problem. It's a major issue for society. Interesting, Yann, they always turn to their governments to bail them out when they don't have enough insurance, and that's a major issue. Rob, what you got?
So, Jan, I'm hoping at a very high level, because I know there's a ton of detail and a ton of work that kind of goes on behind the scenes to allow you guys to do what you do. But for our audience, I'm sure, like me, they're trying to wrap their head around this. The need is there. The product market fit is kind of obvious, but I'm just kind of curious how you do what you do. So maybe you can peel back the curtain just a little bit. Obviously, your clients, I'm sure, give you information, right, about their shipping routes, whether it's a flight, whether it's a shipment, et cetera. And you've got some track record of, hey, these arrived on time, these have been delayed for these reasons. But, I think about you mentioned some of the, idiosyncratic reasons like a crash. You mentioned hurricanes, there's an individual event like a Hurricane Beryl that we're just talking about, but then there's, right, like what's the ocean temperature this year? What's the hurricane outlook this year? What's climate change in general going to be in the next 10 years, the next 20 years? Then you've got some of this geopolitical risk. I think about like the Houthi rebels and some of the Red Sea, attacks that we've been hearing about. And that's something that, once that changes, right, the risk dynamic, that's going to stay probably for a few months to possibly a few years as kind of an elevated risk. So, how does your product work? First of all, is it like based on time? Is it based on, each shipment is its own kind of contract, I guess, so to speak? And then how do you, how much information do you take in from your client, but then how much are you bringing in kind of outside or, external information to create some of your modeling to price out the product just to make sure that you're able to underwrite this risk at a profitable level?
Yeah, no, fascinating question. Thanks a lot. So I kind of backtrack a little bit from our last discussion, give you a quick recap. And I think, James, you were asking it up front. So 22, 23, and this year, right? So since we last chatted, so we went through the Lloyd's lab in 22, and we created a relationship with our Lloyd's underwriter. We also met a bunch of, insurance companies. So we created a lot of our network, not only in the US, in Bermuda and offshore, right? So that was kind of one of the milestones that was achieved back in 22. Then going in 23, we launched our first product, an aviation product, so air cargo delay, which was, has a good amount of success. It's also a niche market, much smaller than maritime, as you guys can imagine. So we have decent volumes, but then always looking forward to the ocean freight as our home run. And then we eventually, rolled out and launched our maritime product this year. Right. So that's been kind of the few milestones I wanted to give the audience a little bit of the recap and the rundown. Right. Now, while we went through this process, there was quite a bit of learning experience, right, from both the market, the customers, but also the partnership, right? And a few of the wins that I'm incredibly satisfied and incredibly, grateful for is we built a partnership relationship along the ways. And one of the most critical ones is the right data vendor and data partners that we're actually working with. And if you look at the news the past couple of days, we actually signed a partnership with Overhaul, which is one of the leading risk management and logistics visibility provider in the US for cargo and logistics. And, that's one of those, partner that we essentially getting quality data and also the right network to propagate our product, right? So we created those partnerships along the way to create this real reliable and secure real-time cargo tracking, both in aviation and now in maritime. I think that was one of the key foundation of how the platform can work properly, and that can be completely independent from, let's say, an adjudicator after the fact to try to justify a loss because of a delay or whatnot, right? So we're completely independent and we're third party, and we're trying to make it very transparent and fast. So with that, we only work with what the freight forwarders and the shippers are actually working with on a day-to-day basis when they manage shipments and they move assets from A to B, which is either the bill of lading, the container ID in maritime, or the airway bill, which is the air cargo transportation ID, right? And with that identifier, then we take over and we essentially manage the rest of the policy, right? We don't need the customers to update anything. Everything's automatic. Everything is real time. So that was a lot of this platform build that we worked on the past 18, 24 months, right? So quite, chunky amount of work and engineering, and, very glad that we are at the spot that we are at right now. And in terms of your question about underwriting, real-time access, external data, so we acquired, in excess of 12 million worth of proprietary data in freight, logistics, cargo, and in terminal data that we essentially ingested and turn into the black box, the AI machine learning to essentially like spit out dynamic pricing for our customers. And then we always try to essentially gear towards customer value and bring the most affordable pricing we can for the right product, right? So we just launched a 3-hour delay by air, right? And that was on the back of a lot of the perishable exporters out of Latin America, and also like some life science logistics that are very concerned about vaccine destruction, for instance, or medical specimen, spoilage. And in that case, we want to essentially fine tune some of the product, but also keeping an eye on the underwriting loss ratio and profitability performance, right? So that's always a game, like a balancing act, right, between those two. And in terms of like more external factors, so we're starting to consume some of the climate and weather data, whether public or to external sources. But really what we want is being ambitious in the future, right? So really going for the full gamut of climate risk and running the cross correlation between different factors and bring like the most affordable pricing, but also like looking at the loss ratio and performance in the future.
Cool. So, Yann, how big do you think this market's going to be for you? Is this $1 billion market?
Hopefully, it's 50 of those billion. Yeah. So, pitch deck that I'm sending my investors is 50 billion market size. Yeah.
That's an incredible market. Is distribution, because this is a non-traditional product, are you having to do a lot of client or prospect education to really explain this? Is it difficult to get people to understand? I mean, it would seem to me like your primary challenge now that you've hashed out so many technical details is distribution, just getting this product in people's hands and explaining how much better it is.
Yeah, I think you nailed it. I think it's actually 80-20, right? So 20% difficulty in building the platform, 80% is education. It's a nice problem to have. Obviously, we're kind of bringing good news to exporters, to shippers, cargo owners, that they now have access to something they've been waiting for so long. But then, some of it is actually explanation, education, a lot of back and forth conversation, building marketing material, for them to explain their customers and whatnot. Some of them is also fine tuning the product itself. As I said, right? So we had a 12 hours delay by air. We just launched a 3-hour because now 3 hours is what our customers are asking. And there's definitely some more, new product feature we'll be launching in the future. But as far as the distribution channels, right? So our go-to-market, we work with 3 types of channels. So the first one is freight forwarders. So logistics, 3PLs, time-critical logistics. So what they do is they have insurance as one of the service lineup they offer to their customers, right? AKA cargo insurance, the traditional cargo. So now we're creating a new product within their toolkit, right? So we're offering them to upsell, to create new value, to reopen conversation, to say, okay, you've been suffering delay risk for so long. Now we have that product. It's powered by Otonomi, and it's like this, and that, right? So this is one of the channels. The second one is insurance brokers, right? Obviously, the Marsh, the Aon, the Lockton, the Gallagher, they manage huge portfolio in marine cargo, right? They have very established relationship with large corporates and 3PLs. So essentially going back to market with them, right? So there's different type of distribution strategies, but they obviously have great experience that help us, getting access to large accounts. And the final one is direct clients. So I was on the road trip, on the road show the past couple of weeks in Latin America, for instance, Chile and Peru. And I talked to salmon exporters out of Chile. They're actually the second largest exporter of salmon behind the Norwegians, which is interesting. I didn't know that. They also like the largest exporter of cherries. Cherries export is actually starting in October, November, and it's actually fitting into the Chinese New Year in January, February. So there's a lot of like delay risk, and they want to mitigate those risks. So preparing those conversations and how to structure the program in order to manage their exposures in the most effective way. So there's many of those situations and conversation, and I'm glad to be first to market, but that comes with a lot of effort and education of the market themselves. Yeah.
Absolutely. Rob, wrap us up.
Yeah, Yann, I'm really fascinated by this, and it's so great just to kind of hear kind of what you were conceptualizing in 2021 to see the actualization of it and expansion and the product innovation in 2024. So that's outstanding. Maybe you can just kind of share with us a little bit about some of the regional differences or challenges. You mentioned Latin America, certainly Asia Pacific, the US, are there, I'm sure some problems are common globally, right? Like hurricanes, but others are going to be kind of maybe nuanced to a particular region. And then finally, like, where do you see further product innovation in the space going?
Yeah, no, so absolutely. So just to give you a sense of our, product strategy and quite frankly, our go-to-market strategy, we very much focus on what we call trans-Pacific trades, right? So Asia to Americas, right? So both Asia to North America, but also South America, and conversely, right? So Latin American export to China and so forth. So this Pacific trade is 60% of the global trades. This is the largest chunk. We're not excluding any export to Europe as well. We're part of that, conversation, but this is where we find the most interest overall, right? Americas to Asia Pacific. And the nature of the market is obviously interesting. There's a lot of different colors and flavors depending on where you distribute. And you guys are actually experts in the space, right? So if anything, you can give me your 2 cents. But what I'm essentially talking about, half of my day is, admitted product, non-admitted licensing, getting access to a fronting company on a direct basis, reinsurance basis, using Lloyd's, using Bermuda, using other underwriters. That conversation is, complex. It's fascinating, but at the end of the day, I would love to be able to sell my product without having to go through the red tape, day in, day out, right? So that's a big consideration, right? So I'm literally spending a few hours a day talking to reinsurance company, reinsurance brokers, fronting companies, trying to launch new products in certain regions, right? But then the other aspect that's also same different is distribution, setup, right? Some of the distribution or let's say logistics incumbents that's in Latin America are allowing a lot of the kind of commission markup, and they're more freely trading insurance. Some markets also more regulated in terms of the commission structure being controlled by brokers. So that's also a consideration that we have to think about, when we enter a market, because we all about compliance, right? So I eat compliance for breakfast every day. I spent, over 2 decades banking in insurance industry. So for me, only doing this thing, I'm going to be compliant to the local laws and regulations. So that's creating a lot of complexity, but, glad to go through it again. That's the pros and cons of being first to market. And then finally, so the customers, the market are responding, positively. Like obviously they need that product, but it's a different type of response, and risk appetite. We don't have the same perception from perishable exporters, whether they are in South America or they are in, say, Indonesia or Malaysia. While at the same time, the product could be very similar, but the way they actually operate and they ship and what kind of ports and carriers they rely on in order to transport from A to B is also a different process. So that creates a lot of feature and a different, kind of layer of complexity that we have to deal with, even if the product is very similar in nature. Right?
Awesome. Great conversation. I really enjoyed it. I'm excited to see what's coming in the future. Certainly, I hope it's a $50 billion market for you. That would be amazing and exciting. And you'll have to do a party in the ancient ruins of Babylon if you get to that point. I expect a big blowout, and then maybe go to London for your next stop. Side note: Do you follow football, soccer, the real football that you play with foot?
Yeah, I know you're coming up with a joke to me because we just lost yesterday in the semifinals. Yeah,
it's not a joke. Not a joke. I just was curious since it was in your neck of the woods. It was over there, and my boys from Argentina managed to squeak by and are headed on to Miami. Should be an interesting final. So for anybody not watching the America's Cup, it's been a really exciting. I went to the Argentina-Ecuador game in Houston, and it was a squeaker. Went to penalty kicks, and then the game against Canada. Actually, it was 2-0, but it was a tight 2-0. And so it was a really exciting match, and I cannot wait. I think if you're a soccer fan, I think this is an amazing time to be alive in North America, because we're edging up on having the World Cup in North America 2 years from now. And I feel like the America's Cup is just a preview of what it's going to be like to go to different games around North America, in Canada and the United States and Mexico. So, Yann, I'm excited that the Canadians got to the semis. Sorry that it didn't work out, but I'm really fired up about the finals in Miami. And obviously, I'm personally hopeful Argentina is going to pull it off, because I've got a pretty big crew down there. So I'm excited about Argentina. Rob, did you watch any of the games?
So I've been focused on the Euros, and my wife is German, so unfortunately, Spain took us out. So kind of in that point where you're like, do we cheer for Spain now so we feel better about going out in the quarters or not? So
yeah, you do. I think that's the universal rule in all sports, Rob. Is you cheer for the person that knocked you out because it makes you feel better about being knocked out.
We could have been second.
Exactly. So exciting time to watch soccer. All the teams are great, especially the ones that make it this far. So anyway, and really enjoyed the conversation. And Yann, I'm really hopeful for Otonomi. If people out there want to find out more information, that's Otonomi. That's Otonomi. Otonomi.ai. Otonomi.ai is the website, correct?
Correct. So my email is Yann@Otonomi.ai. We can find us on LinkedIn, Twitter, and glad to grab a Zoom call with whoever is interested in learning more. And so thanks a lot for having me. I was talking about the Euro myself as well. So actually, France lost to Spain, and that was my disappointment. But I'm glad for Argentina to move to the Copa America.
Well, yeah, Yann, the reason I connected in Canada is pretty much every Frenchman I know was rooting for their French brethren in Canada to beat Argentina. So that was the reference there. But I'm excited about the America's Cup, Rob. I gotta be excited about the home territory.
Yeah, James, I don't know if you missed prior to jumping on the call, but Yann is now a U.S. citizen, so he can suffer with us to not even make it to the elimination rounds.
We did. And by the way, congratulations on your citizenship. I don't think I said that, so I'm super excited for you. You can root for a team that doesn't make it to any playoffs.
Definitely going down in weight class, Yann. It was a bad move. Great country, bad soccer team.
Yeah. We got a long way to go. Anyway, awesome. Well, thanks for the time, and obviously to our listeners on Listener Land, thank you for listening to this episode of the InsurTech Geek podcast. Our discussion with Yann Barbarroux from Otonomi. Thanks, Yann.
The InsurTech Geek podcast is all about technology that's transforming and disrupting the insurance world. I've been your host, James Benham, that's jamesbenham.com, with co-host Rob Galbraith at endofinsurance.com. We're taking you on a journey through insurance tech, so enjoy the ride and geek out.